Welcome to this explainer. Our goal today is actually pretty simple. We are taking AI confusion and turning it into AI confidence. And we're going to do that by totally dismantling the business model of what I'd call the ultimate hardware monopoly, ASML.
So, ask yourself, who truly powers the AI revolution? Now, your mind probably jumps straight to those famous software algorithms, right? Or maybe the massive GPU giants. But let's look past them for just a minute. I want us to focus on the single company building the indispensable physical foundation for absolutely all of it. Without this company, the entire AI boom literally just stops in its tracks.
All right, let's dive right in. What we're doing today is capturing that modern investor essence right out of the gate. We are committing to cut through all that deafening tech noise out there to deliver a really clear, structured look at a financially dominant cash engine. So no hype here, just the fundamental mechanics of a truly irreplaceable business. Here is our agenda for this explainer. 1. The AI hardware monopoly. 2. ASML's high-margin growth engine. 3. Unpacking the financial numbers. 4. Future growth and backlog. And 5. The modern investor's takeaway.
Let's kick things off with Section 1, the AI hardware monopoly.
Just look at that 100% figure. It's wild, right? Because of a multi-decade development timeline and honestly just immense capital requirements, ASML faces virtually zero direct competition in commercial extreme ultraviolet or EUV lithography. Past rivals, like Canon and Nikon, well, they abandoned EUV development years ago. So today, ASML stands entirely alone at the finish line.
Moving right along to Section 2, ASML's high-margin growth engine.
So how exactly does ASML make its money? Well, their revenue streams are brilliantly split into two parts. On one side, you've got system sales. This is the capital-heavy hardware, pulling in anywhere from 180 million to well over 350 million euros for just a single unit. But on the exact opposite side, there's the installed base management. This is a deeply lucrative, almost annuity-like stream of service contracts and software upgrades. It's where massive upfront capital meets highly predictable, recurring cash flow. And the synergy between these two? It's incredible. System sales drive roughly 75% of the revenue. But don't sleep on that 25% service slice. That is a tremendously powerful economic moat. Every single time ASML sells a machine, their total addressable market for services automatically expands. They basically transform cyclical hardware spending into a deeply predictable financial base. Listen to this striking metaphor we found in our research. Every ASML EUV system is like a Formula One car. They are insanely complex, they require constant tuning, and they become completely obsolete without continuous upgrades. Uptime is absolutely critical for chip makers like TSMC and Samsung, which means these aftermarket services aren't just nice-to-haves, they are mandatory. It creates this structurally captive customer base that gladly pays for constant maintenance. Now let's get into the hard data in Section 3, unpacking the financial numbers. 52.83%. I want you to take a moment and just appreciate that number. This is their annual gross margin. The absolutely crucial takeaway here is that this proves supreme pricing power. ASML is easily passing on manufacturing costs and extracting premium profits from its highly specialized equipment. Essentially, they dictate the terms. And then we have 94.43%. This is their return on invested capital. And wow, it is a staggeringly high efficiency metric. You see, ASML actually requires relatively little tangible capital to scale its high-margin hardware ecosystem once the core R&D is finished. They're extracting maximum cash flow for every dollar invested, which demonstrates absolutely elite capital allocation by their management team. 8.93 billion euros. That number represents their net cash position. They are sitting on 13.3 billion in cash and short-term investments against a remarkably low total debt. Guys, this is what we call a fortress balance sheet. Leverage is practically non-existent here. Their solvency and liquidity are completely secure against almost any economic shock you could throw at them.
All right, let's look at the road ahead in Section 4, future growth and backlog.
So massive built-in demand is pretty much securing their runway. A backlog of over 38 billion euros is hard proof that the insatiable need for AI hardware simply isn't slowing down anytime soon. Looking a bit further forward, management is targeting a 2030 revenue ambition somewhere between 44 and 60 billion euros. At this point, the demand is practically locked in.
Now, what exactly is fueling all this growth? Well, there are three key catalysts. First, they are aggressively ramping up their high-NA EUV production, which is their next-generation system. Second, they've got this highly strategic €1.3 billion partnership with Mistral AI. The goal there is to integrate advanced software coding right into their lithography development. And finally, there's just the ongoing, insatiable build-out of global AI infrastructure by massive data centers and megafabs all over the world.
Now, to be completely fair, we do need to impartially address the headwinds here. Things like tightening export controls, including the proposed Match Act, and restrictions on shipments to China, these have definitely caused some short-term stock dips and created regulatory exposure. But if we're looking purely at the data, while geopolitics certainly caused some friction, ASML's underlying technological moat and Western demand remain incredibly resilient.
Which brings us to our final part, Section 5, the modern investor's takeaway.
We are seeing historic dividend growth scaling up nicely here. They've proposed a total dividend of €7.50 per share for the year. That's a solid 17% increase. And the best part? This payout is comfortably covered by their massive free cash flow, proving management's unshakable confidence when it comes to long-term visibility.
On top of that, they're actively shrinking the share count. Cumulative cash returns are being driven by really aggressive stock repurchases, including a newly announced €12 billion buyback program that runs straight through 2028. It's a fantastic dual approach, safely returning capital to shareholders while resting comfortably on an absolute mountain of free cash. And that brings us to a core philosophy we stand by: courage over fear. Invest when the time is right. When you see short-term market noise driven by geopolitics or cyclical pauses, just remember ASML's absolute iron grip on the fundamentals. Their elite margins and unbreakable monopoly are the ultimate signals for the focused, long-term investor. I'm going to leave you with this final thought. As AI completely reshapes the global economy, can any portfolio truly afford to ignore the single engine that makes it all possible? Thank you so much for joining me for this explainer.